Hello there, this is fairbinaryoptions.com, and I would like to discuss the Australian dollar, US dollar today, as we are preparing for the all-important FOMC statement, FOMC press conference tomorrow. So all markets are going to do is to try to figure out what the Fed is going to do with the rates, how it will exit the quantitative easing program, and so on and so forth. Now, in the meantime, we can plan some trades, and we can look at the charts, as technical analysis should go only with fundamental analysis as well. On the Australian dollar, US dollar, this is a daily chart, and never be scared to look at the bigger picture, because the bigger picture will keep you on the right track when you trade financial markets. Now, the thing is that the previous triangular formation, or triangle that broke lower on the Australian dollar, US dollar, it was a clear five-way structure. So if you mark the highs from the beginning, from here like this, if you mark the highs with a polyline, and you go like this from here to here, so this to be 1, 2, 3, all the way to the downside, 4 and 5 in here. This would be an impulsive move with a third wave extension. The impulsive move with the third wave extension usually has, for the third and the first one, let's say the equality rule is being respected. They are almost the same. But as you can see, you have, for the fifth wave, we have a failure, it is being called, and this failure for the fifth wave is given by the fact that it is not, or a possible failure. In this arrangement, it is not a failure, but it might be, for example, that the third wave to be done here, the fourth and the fifth. It doesn't really matter for the whole picture. So this would be the third wave in here. This would be the second wave in here, and then of course we should look for, so the second wave in here, and then we should look for the fourth all the way here. So 1, 2, 3, then the fourth wave. And if the fifth wave is done here, that is an impulsive move. Now, an impulsive move is a five-way structure that respects all the rules there. Now, from this moment of time, what we have on the right side can only be either a contracting triangle, part of a zigzag, or it should be a classical flat A, B, C. Now, if this would be a flat, then this should be an impulsive move, or a terminal impulsive move. Well, it's not. And if it is not, then the path of least resistance will be, we should look for a triangular formation for the B wave. It means that we need to have a wave of a bigger degree, this one here, to be something like, let me put it of a different color, like this. So this would be wave A. So we have a five-way structure for the first zigzag. In a zigzag, the C wave that goes usually takes the same amount of time like wave A, but in order to measure the time element, you need two vertical lines. So if you take the time element for the two vertical lines, with the two vertical lines like this, and then we should just wait for the triangle to break lower. You might say, all right, it broke lower here. Well, it doesn't seem so, because in order for this one to be considered a break lower, we need 5 legs of a triangle, but we only have A, B, and C, probably 3. What I'm trying to say is that the Australian dollar, US dollar would still need some time to consolidate. I would say that the move here is the end of the C wave of a triangle, and the B wave out of this degree is not completed. What we do know is that in order for this one to be a zigzag, and in order for this triangle to, let's say, resume, it needs to end above 88.95. So what do we have? We have A, B, C probably here, the D wave to the downside, then an E wave, and then a break lower. So I would say the psychological level, like started this recording, the psychological level of 0.90 is there just to, let's say, screw any possible analysis, because the actual target where the market should go, and even below, would be 88.95, so something like 100 and something pips lower. And then we'll look for an E wave, and then that's it. we're applying the time element from wave A on the right side, and we will have the time element for the next C wave to the downside. What I'm trying to say is that for this week, I would like to buy put options, and that means that the Fed that is going to come tomorrow is going to be a bit of a bullish for the dollar, and this and the lows here in the D wave, in the B wave, would be in cards. So talking about 87 or talking about 88 something, that will be actually a nice area to go and buy call options, but not here and not now. Here and now we would like put options for the pair. So let's write here on the screen that I'm buying put options with end of week expiration date on the Australian dollar and US dollar. End of week meaning on Friday, by the time the US markets are closing. Thank you for being here, fairbinaryoptions.com. Make sure you check our website, make sure you check our Binary Options Academy with all the projects that we have there, and both technical and fundamental analysis, and I'm sure you'll find that helpful. Bye-bye.